So I think it's a really good time to take a look at OWCP stock and reflect on it a little bit, see what happened, because it has been quite a while. The stock has gone down fairly significantly from its peak, and it's a good time to take a look at it. But anyways, this company was a pump and dump, and I know that a lot of people don't like hearing that mentioned because they did lose money on this company, but that's what it was. The company got pumped fairly significantly, and then somebody dumped it, and now it's worth a tenth of what it was worth at its peak. So that's what it is. But this company was really popular at the beginning of 2017, primarily because the company had grown exponentially, essentially, in its stock price. So you could have gotten this company at a third of a cent at the end of September of 2016, about a third of a cent. And you could have sold it for over $3 at its peak. Well, you can't see it on the graph, but at its peak, this company was worth over $3 a share. So you could have made potentially 1,000 times your gains. So if you invested $1,000 into this company, you could have had $1 million at its peak if you timed it correctly. And of course, it's pretty much impossible to know that this was going to happen unless you did it. You were the one who was doing it, but that's that. So anyways, this company was pumped and dumped fairly significantly. And there's a big misconception that companies that get pumped and dumped are really shitty companies. It tends not to be the case. And whenever you're going to be pumping up a company, there's two real factors that have a lot of significance. The first factor is the company has to be at least somewhat decent. It has to be a company that is somewhat decent, and it has to be a company that's hard to evaluate. So if I had a lemonade stand at the corner of my street, it would be really easy to estimate the amount of profit that it could make, and it would be really easy to put a valuation on the company, and nobody would pay 10 times the amount that you should pay for a lemonade stand because nobody is stupid. On the other hand, if you have a pharmaceutical company that is researching medication and that is tapping into a new field, it's really, really difficult to actually put a value on it because you don't know whether or not the medication of this company will be successful. You don't really know much. This company could be worth $1 billion, or it could be worth nothing in a year from now. Nobody really knows, and it's really difficult to put an evaluation on it. So in terms of evaluation, people would be willing to pay 10 times what the company should probably be worth just because not everybody understands how everything should be priced. And people, when it comes to research companies, when it comes to companies that are really difficult to evaluate, people tend to be able to justify whatever the evaluation is on the company, and they tend to be able to justify somehow that the company could be worth more. And that's what happened with this company when it was, when the price was peaking around here. There were plenty of people on Reddit justifying to themselves that this company could hit $5 or $6 by the end of the year, stuff like that. But if you take a look on Reddit, by the way, Weed Stocks Reddit, you can take a look at through some of the posts that people posted and just see where people went wrong, see what people were thinking, and just learn off of this if you wish. So that's that. But anyway, so there's that factor. There's also the factor of the big event. So around this time, around when this stock was peaking, it was also right after the elections, and there was a lot of coverage on marijuana. The votes just went through on marijuana. California voted to legalize recreational marijuana. A few other states had, and there was a lot of media coverage and just talk in general about marijuana. And because of that, people were looking at these different companies, and this company stood out quite a bit because its stock price had been rising so significantly from where it was before. So this company got caught up in that a little bit, and that propelled it even further. So those two ingredients, the fact that this company is very difficult to evaluate and the fact that it was pumped at a time when a lot of people were looking at companies that were growing significantly, those two ingredients resulted in this company being worth quite a lot. Now, this company also had the unfortunate, how do I put this? This company got caught in the unfortunate scenario where the people who invested around here, and I know that there were a few people on Reddit who said that they bought around this price, around $1.30. The people who bought here eventually justified themselves that if they held long enough, this company would become profitable. And the really unfortunate thing for those people is that while they were sitting and looking at their losses with this stock, the whole market was doing really, really well. So any money that you invested into this company and didn't want to sell it, I mean, you were losing significant portions of that money, and the market was also doing really, really well. So it took a while, but people eventually started selling this stock, and it took a few months, but the stock finally went down to the point where I thought that it should be worth. I mean, this company should not have been worth as much as it was worth. I mean, a $400 million valuation for this company was ridiculous back then. And some people might disagree, but here's the thing. When it comes to a company like this, if I told you that you could have bought Apple in 2008, in December 5 of 2008, you could have bought Apple for $100 a share, would you have done it? No, because at that point, this company was simply not worth $100 a share because the company was not big enough. For $100 a share, in 2008, you could have bought, or for $100 a share, for the equivalent of that amount of money, you could have bought different companies other than Apple, and they would have given you much, much better value. You could have bought bigger chunks of other companies for the equivalent of $100 a share for Apple, right? And same thing with this company. When this company was worth about 200, 300 million, whatever the evaluation was, for that amount of money, you could have just simply bought a better company. It's just the case. There were companies that were further progressed, that had more patents, they had more medications, they were further in their trial phases, and they were just doing more stuff. Now, this company does have it, I believe it's the psoriasis cream that's coming out by the end of 2017. I think that's when it's coming out. They might have changed the deadline, I'm not sure. But that's the thing. So this company, fundamentally, it's not a crappy company. It's just people overpaid for it. That's the simple fact. It wasn't worth what people were paying for it, and it had to fall eventually, and it did. The good thing about this, just to wrap it up here, but the good thing about this pump and dump is that if this company actually turns out to be a decent company, if it continues doing research and continues developing medications in the future, because a lot of people lost money on it and this pump and dump happened, there's a chance that if this company actually starts developing something that might be worth a lot of money, you might be able to buy this company at a discount in the future, because a lot of people are just not going to be willing to touch this company because they either lost money on it or because they don't feel comfortable buying a company that got pumped and dumped a little while ago. So if you keep watch over this company, and if the company actually starts becoming successful, which the chances are slim, but it is possible, but if this company starts becoming successful, then there is a possibility to grab this company at a fairly cheap price, primarily because this happened. And a lot of people are not comfortable investing into companies that that have lost 85% of their value since their peak because they got pumped and dumped. So keep an eye on this company. It is an interesting company, but it's just nowhere near being as developed, as progressed as some of the other companies, and it should have never been worth 200, 300 billion, not billion, million. But yeah, so hopefully you learned something. I know a good amount of people got caught up in this, and it is always painful to admit that you got caught in a pump and dump scheme, but it happens. Move on, sell your stock, put it in the market. You can make the money back depending on how much you lost probably within a year. I mean, unless you bought at the peak and held it till now, then you're screwed. But if you sold it within a reasonable amount, you should be fine. So